Have you ever wondered if it's actually possible to turn a handful of $10 bills into a serious investment portfolio without betting on risky meme stocks that crash overnight? Most people think you need thousands of dollars to start investing in the energy sector, but today I'm going to show you a Canadian giant that is currently trading for less than the price of a fast food meal, and it's a company that some of the biggest institutional investors are watching very closely right now. Welcome back to Wealth Mind Investing, where we break down the most promising opportunities in the market under $10 to help you build real wealth from scratch. Before we dive into the deep numbers and the future potential of this specific energy powerhouse, I have to give a quick disclaimer that I am not a financial advisor, and this video is for educational and entertainment purposes only. Investing involves risk, so always do your own research before putting your hard-earned money into any stock. If you find value in these deep dives, make sure to hit that like button and subscribe to Wealth Mind Investing so you never miss a hidden gem in the Canadian or US markets. Today we are talking about Baytex Energy Corp, a company that has survived the most brutal cycles in the oil and gas industry and has come out the other side leaner, stronger, and more focused than ever before. To understand why Baytex is such a compelling story for small-scale investors, we have to look at the massive transformation they've undergone over the last couple of years. Not too long ago, this company was struggling with high debt and a scattered portfolio, but they made a bold move by acquiring Ranger Oil in the United States, which gave them a massive foothold in the Eagle Ford Basin. This wasn't just about getting bigger, it was about getting better quality oil that is cheaper to extract, which is the secret sauce for any energy company trading at a low share price. When you are looking at a stock under $10, you want to see a management team that isn't just sitting around, but one that is actively working to return value to you, the shareholder. Baytex is committed to a very specific plan where they take the extra cash they make from selling oil and use 50% of it to buy back their own shares and pay dividends, while the other 50% goes toward paying off their debt. This is exactly what we look for here at Wealth Mind Investing, because when a company reduces its total number of shares, your individual slice of the pie becomes more valuable automatically. Imagine a company that is pumping out thousands of barrels of oil every single day across the best fields in Alberta and Texas, yet the market is pricing it as if it's just another small player. This disconnect is where the opportunity lies. Baytex is currently focusing heavily on the Duvernay and Clearwater formations in Canada, which are some of the most profitable areas in the entire industry right now. Because they have diversified their assets between Canada and the US, they aren't at the mercy of just one local market's pricing. They can sell their oil where the price is highest, which protects their profit margins even when the global economy gets a little shaky. For an investor with a small budget, buying into Baytex is like buying a high-tech engine at a discount price because they have modernized their drilling techniques so much that they can stay profitable even if the price of oil drops significantly. This break-even point is the most important number for any energy investor to watch, and Baytex has worked incredibly hard to keep theirs low, meaning they are built to survive the bad times and thrive during the good times. One of the reasons many investors are staying glued to their screens regarding Baytex is the sheer volume of free cash flow they are generating. In the world of investing, cash is king, and Baytex is currently a cash-generating machine. Even with oil prices fluctuating, their ability to generate hundreds of millions of dollars in excess cash allows them to strengthen their balance sheet at a record pace. When you look at the charts, you'll see that the stock often moves in tandem with the price of crude oil, but there is a hidden strength here because as they pay down their debt, the floor of the stock price tends to rise. This means the risk-to-reward ratio becomes very attractive for someone looking to build a position under $10. They have recently reached some major debt reduction milestones, and every time they hit a new target, they increase the amount of money they send back to shareholders. It's a snowball effect that most people miss because they are too busy looking at expensive tech stocks that don't even make a profit yet. But let's talk about the risks, because at Wealth Mind Investing, we believe in looking at both sides of the coin to give you the full picture. The biggest challenge for Baytex, like any energy company, is the volatility of the global energy market and the transition toward green energy. However, the world still runs on oil, and the demand for heavy and light crude is expected to remain high for decades. Baytex has positioned itself to be a low-cost producer, which is the safest place to be in this sector. They are also using advanced technology to reduce their environmental footprint, which makes them more attractive to big banks and institutional investors who are now very strict about environmental standards. If these big players start buying back into Baytex in a major way, that sub-$10 price point could quickly become a thing of the past. This is why timing and patience are so critical when you are playing in this price range. You are essentially looking for a company that is being undervalued by the general public, but has all the mechanical parts of a much larger, more expensive corporation. As we look toward the rest of 2026 and beyond, the story of Baytex Energy is one of resilience and smart growth. They aren't just drilling holes in the ground. They are strategically managing a portfolio of high-return assets while treating their shareholders like true partners. For those of us watching the Canadian markets closely, it's rare to find a company with this much production capacity and such a clear path to debt freedom trading at these levels. It's a classic example of a value stock that the big Wall Street and Bay Street analysts often overlook until the price has already doubled. By keeping a close eye on their quarterly reports and their progress in the Duvernay field, we can see the roadmap they've laid out for long-term success. The goal isn't just to see the stock go up a few cents. The goal is to hold a piece of a company that is fundamentally changing its financial DNA to become a powerhouse in the North American energy sector. If you've made it this far, it shows you're serious about your financial future and you have the patience required to be a successful investor. The journey to wealth isn't about one lucky trade. It's about understanding the business behind the ticker symbol. I want to hear from you in the comment section below. Do you think oil stocks like Baytex still have a place in a modern portfolio? Or are you looking at other sectors for your under $10 plays? Your insights help the whole Wealth Mind investing community grow, so don't be shy about sharing your thoughts or asking questions. Also, if you know someone who is trying to start investing with a small budget, please share this video with them so they can learn that you don't need a fortune to get started in the stock market. We are building a community here where we prove that smart investing is about the quality of the company, not just the size of your bank account. Keep your mind focused on wealth, stay disciplined with your research, and I will see you in the next video as we continue to hunt for the best value in the market together. Thank you for watching, and remember, the best time to start learning was yesterday, but the second best time is right now.